It's not an uncommon problem for our viewers' clients, Barbara. They're experiencing financial difficulties, and they've got to decide which creditors to pay. Should they keep the lights on, or should they deposit employment taxes with the U.S. Treasury? What do you think?
Well, certainly it's a really tough decision for businesses in that situation. But you have to keep in mind that there is this 100% penalty for failing to deposit trust fund money. This is the penalty for deciding to pay other creditors rather than depositing the trust fund dollars with the Treasury.
I'll start with the baseline question. What exactly are trust fund taxes?
Well, these are the taxes that employers withhold from income taxes and Social Security and Medicare, FICA taxes withheld from employee wages. Essentially, it's the employee's money.
Okay, so what's the penalty?
Well, that 100% personal penalty on a responsible person applies if you can A, prove the person is a responsible person, and B, prove that the person acted willfully.
There was a recent case before the Court of Federal Claims involving Douglas Waterhouse. What happened here?
Well, in this case, we had a 40% owner of a glass company that was experiencing financial difficulties. But they had one big job that they were working on, and they were hopeful that if they could keep this job going, then they'd get payment that would help them out of this financial difficulty. So in anticipation of this big payment at the end, they chose to pay their suppliers so they'd have the materials to do the job, and they didn't deposit the taxes.
Okay, so Mr. Waterhouse is an owner, and he knows about the company's financial troubles, including some employees whose paychecks bounced. Ultimately, the business went bankrupt. What did he argue in the hopes of avoiding the penalty?
Well, he argued against the two-pronged test. He said, I'm not a responsible person, and even if I am a responsible person, I didn't act willfully.
I'm not surprised. Based on the particular facts and circumstances, what did the court say?
Well, the court rejected his arguments. They said he was a responsible person because even though his responsibilities were really ordering supplies and dealing with customers, and one of the other owner's responsibilities was writing checks and depositing taxes, he had the authority to do that. He had the authority to sign checks, even though he rarely did it, or he only did it at the instruction of one of the other owners. But because he had the authority to do it, he was considered a responsible person.
And what about his so-called willfulness?
Well, again, he was well aware that the employment taxes were not being deposited. He knew that the money was going towards other business expenses, and so disregarding the obligation to deposit the taxes in favor of paying other creditors, other vendors and such, that demonstrates willfulness.
You're saying that he was personally liable, even though the business was a corporation that gives personal liability protection to its owners?
Yes, the federal 100% penalty in this case trumps state law's personal liability protection.